Welcome to the Recon Trader. In today's video, I will share with you my updated price targets for Bitcoin and Ethereum after this weekend's bloodbath of crypto dumping due to just a bunch of FUD. Now, for you FNGs out there, FUD is fear, uncertainty, and doubt. And we certainly have had a lot of that over the past couple weeks. And it actually started when Janet Yellen of the SEC mentioned high inflation and having to raise interest rates, which is actually not her job anymore. She's not part of the Fed. And that caused a sell-off across stock markets, the crypto markets. And then we had the news of tax hikes on capital gains in the U.S., which would apply to crypto traders like myself. And then the hits just kept coming with Elon Musk from Tesla basically saying they're not going to accept Bitcoin for their cars. And then this weekend, he got bashed on Twitter and kind of threatened, or maybe didn't threaten, to sell all of Tesla's Bitcoin. It's hard to say, but it's not the technicals that are actually bringing Bitcoin and ETH down. It's all this fear, uncertainty, and doubt. Now, as a veteran of the 2017 bull run, and knowing that history often repeats itself, at least until it doesn't, I am taking full advantage of these opportunities. So with that all being said, let's get to the charts. And the first chart we'll take a look at will be the Bitcoin 1 week chart on Binance. I saw a lot of chatter out there that this past weekly candle that closed yesterday was the worst sell-off candle during this bull run. And you don't have to check your 6 and look very far back and see we had a very similar candle right here. In fact, this particular candle from open to close sold off approximately 21%. And if we look at this past weekly candle, it sold off from open to close 20.5%. So this candle sold off more than this candle. So we can debunk that right here and now. And there was a lot of chatter about the sell-off from the all-time high down to the low of the past weekly candle, indicating we're headed into a bear market. Now, if you weren't around in 2017, we had a whole lot of pullbacks that were between 30 to 40%. And each time that happened, those were perfect opportunities to get in at the low and watch your price rise back up. And so if we measure from the all-time high, and we'll go down to the low of the weekly candle that just closed, we're looking at 32.5%. That is almost identical to the numbers we saw in 2017. And I didn't hear that same talk when we hit the all-time high back here and sold off 31% almost. Back during this pullback, it was a correction or consolidation, where this particular pullback is we're now in a bear market. This, to me, looks like a longer period of consolidation. And as much as we have run up, we can't just keep going up. We need to consolidate, and that's what I see happening here. Now, the reality is this 43,000 level that I have drawn in and we looked at the last couple videos, that is a vital level. If we close down below the 43,000, my next target's down here at 32,000. That is where we could very well be headed. Now, we might stop somewhere in here where we see prior resistance, so around the 38,000 level, where prior resistance becomes support. And so I will be keeping an eye on this 43,000 level, and we're currently at 44,000-ish. And you can see we wicked down below the 43,000 recently, but we have since pulled back above it. Now, if we jump out to the one-day chart for BTC, you can see a little more of the price action that's been going on. And again, to me, this is all consolidation. When we saw in 2018, basically the bull market coming to an end, you saw basically a parabolic move up and then a move down. We did not experience the sideways action. And I dropped in the Fibonacci trend retracement tool just to see where we could be headed if we continue to break that 43,000 level. And you'll see the first level would be around 38,000 at the 1272 level. And then the next level is right down there at that 32 to 30,000 level. And so as long as the pullbacks are around the 30% or right at this level here, happens to be 41%, we break this level, now you're starting to look at a bear market. So right around 38,000, we break this level, and now we're looking at a bear market. Now, something I've been looking at when we zoom into the 1 hour chart is I was looking at this price action compared to perhaps a repeat on this price action. And again, price has a memory, and a lot of times we'll see the repeat of one type of price action in future price action. And so this price action will be on my radar to see if we start to duplicate, because if we duplicate, then we see a move back up to 60,000. And so to basically recap, what I'm looking at for the downside is we've got to hold this 43,000. If we don't hold the 43,000, then we come into around the 38,000 level where we had prior resistance that may turn into support. If not, then we're looking down around 32,000 where we do see the prior support on this pullback here. And so this pullback is notable as far as its percentage of pullback is very similar to the amount we just pulled back. And so with the lower levels of 43, 38, and 32, now what I'm looking at as far as moving up, 50,000 is going to be a psychological level. Just it's one of those round numbers that'll be psychological. The next push up from 50 is really going to be right around 55,000, again a psychological level, but we did see resistance around 56,000, so somewhere between 55 and 56 could be resistance. And then of course at the top of the price action we have quite a bit of resistance around the 60,000 level. And until we can actually break through this range that we're currently bouncing in, any targets above the 60,000 would actually be premature. The best you could look at is the all-time high. And so for my upward targets, I'm looking at 50, 55, and then 60. And then a breach of 60 would be the continuation of this trend as far as I'm concerned. Now let's jump over to the ETH chart. We'll take a look at the 1 week ETH chart on Binance. And what I see is this parabolic run up. We certainly were due for this pullback. And again, if we take a look at the size of the pullback from the high to the bottom of the wick is around 30%. And if we check our 6, the last time we really had a meaningful pullback on ETH on the weekly chart, from that high to the bottom of that wick is around 35%. So this pullback is actually greater than this pullback so far. And again, it falls right in that 30% level, which was normal back in 2017, early 2018. And so I don't see any need for the actual panic that's going on right now in the market. Now, after that all-time high, we've had a pullback, but we've already established that it wasn't any deeper than the pullback we had back here. And in reality, ETH is holding pretty much the line of the 9 EMA. And when you move away from like the 9 EMA or the 20 EMA, it is normal to pull back and test that level and then take back off. We've pulled very far away from this 9 EMA. I will continue to watch to see as long as this line holds, and especially a 9 EMA, that's a pretty short moving average. If that holds, I'm comfortable with ETH's price action at this point in time. Now, if we jump from the 1 week to the 1 day chart, I still have the Fibonacci tool from the last video dropped in. We were looking for support around this level here where we had prior resistance before moving up to the all-time new high, and that didn't actually hold. We actually broke down through that prior resistance. It did not, in this case, act as support. The next level I discussed in that previous video was the 786 level, and we did actually wick through that level, and I had my bottom price target in the previous video right around 3,000 at the 618. Well, we didn't make it down to that level and then reversed back up above the 786, or the 3,200 level, I think was that target, and now we're trading in between 3,200 and the 3,500. Now, all three of these were my lower targets. So as far as my new lower price targets, we're still looking at 32 and 3,000. And then worst case scenario, if we break the 618 level, the next two levels are going to be the 2,800 or the 2,700, 2,600 levels. But as long as we can hold the 3,000 level, which would be a 30% pullback from the all-time high, I'm not concerned about this bull run being over. Now, if we do dip down below the 2,600 level, that will grab my attention, and I may start preparations for the bear market. And so to recap my lower price targets for ETH, I'm looking at 3,200, 3,000, and then probably around the 2,700 to 2,600 levels. If those all get violated, then we can start talking about a bear market. Now, on the upper side, those targets really haven't changed. The first level we need to get above is going to be the 3,500, which is this previous resistance that we saw before moving up to the next all-time high. And on our way to that all-time high, the next level is around 3,900, which was resistance again. And of course, we can't target any higher than the all-time high, right around 4,400. And so for the upside targets, we're talking 3,500, 3,900, and 4,400. And so I think that pretty much wraps it up. I always take a look at the bearish and the bullish targets because making money in crypto is not about picking tops or bottoms. The objective is to be involved in the battle at a level that exposes you to minimum risk relative to the perceived profit potential. So with that being said, if you like this video, do me a favor, spike the like. I will be doing more update videos on a regular basis as far as my price targets for Bitcoin and ETH, so now would be a good time to shoot that subscribe button. If you have any questions or comments, drop those down in the comment section below. If you'd like to see the targets of other coins, you might drop those in the comment section down below. Just keep in mind, I don't trade crap coins, so I won't do technical analysis on crap coins. So, in closing, remember, never send your money into battle without first doing your recon. See you in the next video.